Well, we think the situation with Didi is an isolated event. There's obviously Chinese regulation occurring on the internet space, but the situation with Didi has really weighed on the entire sector when we think this is a very company-specific issue.
A company-specific issue, but one in which we're starting to see more and more companies become subjected to. Of course, a lot of these things have to do with companies that haven't been listed yet, but do you expect to see more of these types of news-making, headline-making, regulatory actions take place across the sector? And it's almost as if, at least investors, in the way that they're valuing these things, they expect just dominoes to continue falling as a result of this larger regulatory clampdown.
It's very important for investors to recognize that the regulations are being adhered to and adopted to by the companies. We've not seen the companies' fundamentals in any of the China internet names be hurt by the regulations. Q4 earnings that were reported in February of this year were very, very strong. Many of the companies spoke about how they're adhering, how they're adopting to these new rules. Once again, the Q1 earnings were very, very strong. The companies are saying, we're dealing with this new regulations, but it's not financially impairing them. And I think investors are very irrational almost to be selling these names when the fundamentals have arguably never been stronger.
Well, we don't know, right, what the fundamentals look like because what's been reported is backward looking. But you've been focused on the options market where investors have had maybe a different sentiment surrounding KWeb recently. What are you learning?
Well, we are seeing a lot of investment inflows into KWeb. Investors are buying the dip. It's very reassuring to see people taking advantage of great companies selling at a real discount to both historical as well as relative valuations. And we're also seeing that play out in KWeb's option activity. 7 of the 10 highest open interest contracts are calls. So we're seeing a lot of call buying within KWeb today.
Interesting. And have you noticed any kind of arbitrage between the different markets? We talked earlier about all the various listings and secondary listings. Are investors in different markets trading these names the same way, or are there various spreads developing?
Yeah, it's a great question, Leslie, because you have Alibaba US, but you also have 9988. Bilibili, Baidu, JD, NetEase, Baozun, Yum China, many Chinese companies have relisted in Hong Kong, and the shares are convertible. So on the previous segment, when we talked about the potential for a delisting at some point down the road, institutional investors such as ourselves would simply convert out of the U.S. shares into the Hong Kong listings, and that we see a little bit more pessimism during U.S. trading hours relative to their Hong Kong. It's kind of interesting.
That is interesting. Well, thank you for keeping an eye on it. We really appreciate it. Brendan Ahern, thank you for joining us.
Shepard Smith here. Thanks for watching CNBC on YouTube.